Okay, so let me just show you how to basically approach this. So the recoupment, it essentially means that there's a sale of an asset. Is that all right? Does that make sense?
Yeah.
Okay.
Yes.
So what I'm going to do is I'm going to do something where you've got all the components included in it. So let's we buy a machine that for say $1 million. Let's do now some nice round numbers. Okay, and let's get a new machine. Okay, so we're going to write off a new machine at 40, 20, 20, 20. Okay, and let's make us buy this machine on 25 Feb 2021. Okay, we're going to sell the machine for 1.2 million on 17 April 2022. And let's make the year end of the company equal to, June itself. Is that all right?
Yeah.
So let me just explain what needs to happen. I'm going to show you 5 steps on how to do this.
Okay.
The first step that you need to do is you need to calculate tax value.
Yeah.
Okay. And what's basically going to happen is I would like to show you how to set it out in an exam. So I'm going to open up an Excel spreadsheet so that you can actually have a look at it. Let me just get onto here. Let me just file new. Sorry. Let me just bring that across onto here. Make it a bit bigger, then a bit smaller. Sorry. So I can just next to you over here.
Yeah.
Okay. We'll make bigger to have a look at. So effectively what you should have in a question is you should have a workings column.
Yeah.
A CGT column, and you should have an income or expenses column.
Okay.
Everything all at the same time, and then I always like a little description column or something along those lines. Okay.
Yeah.
So what I would basically do with this is I'd sit there and I'd say, listen, there's a machine. It has a cost. How much the cost is? $1 million. You happy with that?
Yeah.
Okay. And then there's going to be 12C for 2021 because I bought it on 25 Feb 2021.
Yep.
Okay. My first that I'm going to have is 30 June 2021. What is working? It's 40%, 1 million. And I'm going to take off 400,000 Rand off that.
Yeah.
You happy with that?
Yep, I am.
And then 12C, 2022. And what's going to happen? 20% is 1 million minus 200,000. And then in your income and your expenses, what you should be doing is you should be taking off the 200,000 as a deduction.
Okay.
Does that make sense?
Yeah.
You're going to work out a tax value at that point in time. So you're going to work out a tax value at that point in time. And sorry. Oh, wait. Sorry, I clicked on the wrong thing. Where is it now? Sorry, this is a bit compressed. Let's have one there. Sorry, there we go. And we're going to have a tax value of 400,000.
Okay. Yeah.
Now that's what you should do whenever you've got disposal of an asset. You should calculate the tax value first. And let me just explain why you need to do that first. Because step 2 is going to be calculate the recoupment or the scrapping allowance. Now you cannot calculate the recoupment or the scrapping allowance unless you actually know what the tax value of the asset is.
Yeah.
Sense?
Yeah.
So step 1 is always calculate the tax value.
Okay.
Now, sold for
1.2 million.
1.2 million, but limited, okay.
To the amount on which the previous deductions were allowed.
So recoupment is limited to, and the thing is, do you understand that I've only given 400 and 200 in deductions?
Yeah.
Our recoupment is limited to 600,000.
Oh, okay.
Is that all right? So I cannot
Yes.
have a profit of more than I've taken.
So it wouldn't be limited to the 1 million, it's limited to the 600,000.
Yeah, so whatever. So have you done reduction of debt yet in your course?
No, I don't recall that.
So like if you get into postgrad, you'll see there's reduction of debt. And what I'm showing you here is not limited to 1 million. So I don't like to teach students there are things in postgrad that don't work the way that you've just spoken about.
Okay.
So I like to teach people to say it's whatever you've taken as a deduction.
Yeah.
If I sold it for 900,000, what would happen? The going to be 500.
Yeah.
Does that make sense?
Yes, it does.
Then it would be 900 less 400 gives you 500. But this one, your recoupement's limited. So if I had a recoupment, I had 700 there, what would happen? This would only be 300,000.
Okay, that makes sense.
700 and the 400. But if it's 0.2 million, I can't have anything more than what I've taken.
Okay.
This makes sense?
Yeah.
It goes there. Have you done deferral of CGT and deferral of recoupments? You don't show it, or you pass it off over the life of the replacement asset?
No, I don't think we've done that.
Okay, so I'm not going to discuss that here.
Okay.
So that's something again for honest. So you're 600. Now, do you notice that I'm getting my marks as I'm doing my workings?
Yeah.
Now, step 3. Okay. Okay. Step 3. And basically, step 3 is calculate adjusted proceeds. Okay. And let me just explain what adjusted proceeds means. Adjusted proceeds is equal to selling price minus your recoupment. That's equal to. Okay. Now, that's always what happens with CGT. Now, with CGT, all of your calculations, your CGT proceeds is equal to total selling price minus what is in gross income. Now, let me just say that again to you. And whenever you're doing CGT proceeds, it's always equal to the total selling price.
Yeah.
What is in gross income? And what is that equal to? What is not in gross income? And that's what proceeds is. Proceeds is what is not in gross income.
Okay.
Does that make sense?
Yeah, that makes sense.
Okay. So you cannot calculate proceeds unless you know what is in gross income. And by calculating your recoupment, what's going to happen?
You know what's in gross income.
Calculating my gross income.
Yeah.
Does that make sense to you?
Yes, it does.
So coming back to my example now. Okay, step 3. You're going to say selling price 1.2 million. Recoupment is going to be minus off.
Yeah.
Minus 600,000. And what's going to go into my CGT column? 600,000.
Okay.
That makes sense. And that's going to equal my proceeds.
Okay.
Is that all right?
Yeah, I got that.
Okay. So basically, if step 3 is calculate adjusted proceeds, Step 4 is calculate base cost. I'm just going to do the last step down here. CGT base cost is equal to cost that's what base cost is. Cost is what has been deducted already. So look what proceeds is. Proceeds is selling price plus minus what has been put into gross income. Cost is cost minus what is being treated as a deduction already.
Okay.
We're trying to calculate what has not been deducted here.
Oh, okay. That makes sense.
So what CGT base cost is actually equal to cost minus deductions. And I'm going to do this as step 1 and step 2. Now I want you to tell me why have I got step 1? Why would step 1 be relevant?
Because of the capital allowances.
Okay, and why would step 2 be relevant?
Scrapping allowance.
Yes. So the scrapping allowance will come off here in step 4.
Yeah, and then also yesterday I was doing a TAT where there was a section 16.3H input tax adjustment, and they also subtracted that from the base cost. So would one do?
Yes,
wow.
so because it's VAT. Are you talking about section 16?
Sorry, yeah, sorry, the VAT.
Yeah, VAT will always be taken off because VAT you get to claim as an allowance.
Okay.
If you buy a machine, so if the question says buy a machine, for 1,150,000, your entry is going to be as debit machine. Okay. $1 million. Debit, VAT, input. 150,000. Credit bank or creditor, 1,150,000. So if I reword this question saying that you bought a machine for 1,150,000, including that, that's what you would do.
Okay.
In your solution, what you got to do is you got to work out what your cost is, and your cost is 1 million. Sorry, the million over there.
Yeah.
That makes sense.
Yes, it does.
Okay, so that's there, and there can be some tricks as well, which I'll show you 1 or 2 just different things just so that you can work. So if I'm doing base cost now, what I'm going to do is I'm going to say, listen, base cost. What's base cost? Base cost is cost. How much is that cost? $1 million. Okay. Capital allowances, step 1. Minus 600,000. You see where the 600 comes from?
Yeah, I do.
And if there was a scrapping allowance, you would take it off here and you would sit there and say scrapping allowance. Step 2, not necessary for the solution, huh?
Okay.
Okay, because there's no scrapping allowance here.
Yeah.
But I'm just trying to show you all the possibilities. Again, sorry. I went and pushed the table on the Word document, not the table on it.
No problem.
And what is your base cost going to end up at? Minus 400,000.
Yeah.
And what's your capital gain? 600 minus 400 gives you?
200,000.
Your 200,000. And that's how you need to set it up. There is a 5th step as well. Okay. That is if there's any step 5, there might be exclusions or something along those lines.
Okay.
You haven't done like replacements of fixed assets where you defer and you exclude and do stuff like that yet.
I check now and I do see one example like that, yes.
Okay. So I'll try to teach you how this works now. Okay. Do your exclusions. Is that all right? So that's there. Okay. Now, okay, I'm going to just play around with this example a little bit and change it a little bit. Is that okay?
Yep, that's perfect.
So I'm going to say you sell the machine for 160,000 Rand.
Okay.
Is that right? So let's see how that would change our solution. Now, here's the thing. As far as the board is concerned, whether there's a capital gain or not, you have to still do your CGT calculation.
Okay.
Okay. But the one thing we changed now is you sold the machine for 160.
Yeah.
Okay. So what I'm going to do now is what I'm going to do is say step 1 is not going to change. Is that all right?
Yeah, I got that.
How much is it sold for now? 160,000, right? So how much is my scrapping allowance now? Sorry, I keep on doing the same.
Yeah, it's no problem.
Yeah. Okay, so how much is my scrapping allowance now? 400 minus 160 gives me a scrapping allowance of?
It would be 240.
40. And then I will go and I'll put minus 240,000 into my income or expenses.
Yeah.
Selling price?
160.
Recoupment? Nothing, because it's a scrapping allowance.
Okay, got that.
And that gives you 160,000. Happy?
Yeah.
Base cost? 100 million minus 600. There's a scrapping allowance here. How much was the scrapping allowance?
It was 240.
So 1 million minus 600 minus 240 gives me an answer of minus 160,000. And my capital gain will be 0.
Yeah.
That makes sense.
I understand that.
Okay. I want to just change this to 500,000 now. Okay, let's have a look what's going to happen with 500,000. Okay, so step 1 is not going to change.
Yeah.
Sold for 500,000. This is now going to become a recoupment. How much is the recoupment?
100,000.
We're going to go put 100,000 into your income column. Selling price 500. How much is my recoupment?
100,000.
There we go.
So that's 400,000.
Okay. Is there a scrapping allowance here now?
No.
When we sell for below cost, again, there's no capital gain, but we still need to show it.
Okay. Yeah, I got that.
You're happy with that? Now, those are those scenarios. And remember, what I'll do is I'll upload this onto YouTube and I'll send you a link. So if you want to just go through all of this again, you'll be able to watch the video again.
Okay, thank you so much.
Okay, so that's how you do normal stuff. Look at the steps. Calculate tax value, step 1. Calculate your recoupment or your scrapping allowance. I've done one where it's selling above cost. I've done one below cost, and I've done one where it's below tax value.
Okay.
And those are the only 3 possibilities.
Yeah.
Step 3, adjusted proceeds is selling price minus recoupment. Step 4, base cost, which is cost minus deductions, can also be scrapping allowance if there's scrapping allowance. And then step 5 is exclusions, which I haven't done with you yet.
Okay.
Okay. So now what I'm going to do is I'm going to expand this example here. And I'm going to say, let's sell the machine for 1.425 million. Is that all right?
Yeah.
Okay. I'm going to make the year end, okay, different now. Okay. Going to make 28 Feb.
Okay.
Okay, because I want to do something different. And what I'm going to do now is I'm going to say that you replace, okay, machine with a computer on 1 May 2022.
Okay.
Costing $2 million.
Okay.
So let me just explain what happens. In South Africa, they want to create jobs.
Yeah.
But one of the ways to actually create jobs in South Africa is that you encourage people whenever they sell something to replace the asset with another asset.
Okay.
Makes sense to you? Does that make logical sense?
Mm-hmm.
You've sold this asset. We want you to reinvest the money into another asset so that you can employ more people.
Yeah.
Does that make sense to you? So there's rules, okay? And there are two rules, essentially. The first rule is paragraph 65, which says that when an asset is destroyed, okay, or expropriated. So essentially, the idea here is a control thing.
Okay, so would this be like an involuntary disposal?
Involuntary disposal. There's no control over the situation.
Okay.
Okay. It says that you can defer if you replace asset with another asset.
Mm-hmm.
Okay. And you need to spend more on the replacement asset.
Okay. And does it have to be a capital asset, or can it be any?
In their building, it can't be shares.
Okay.
But assets and assets. But you need to spend more on the replacement asset.
Okay.
In this question, I sold it for 1,425.
Mm-hmm.
This one costs 2 million, so this one's fine. But this one wouldn't be paragraph 65. This one would be paragraph 66 because this is sale.
Okay.
Okay, because I replaced it.
Yeah.
It's a voluntary disposal.
Mm-hmm.
So paragraph 66, does it work? Paragraph 66 says you can defer if you replace movable asset with another movable asset.
Okay.
Okay, and you need to spend more on the replacement asset.
Okay, so for paragraph 65, it can be any asset except shares, but for 66, it must be a movable asset.
Yes. So basically 65 buildings are in 65.
Yeah.
But buildings are not in 66.
Okay.
There's a separate section, it's 13.3 for buildings, but normally you never ever do that until you get to postgrad.
Okay, yeah, I don't think we've done that section yet.
So there is an equivalent of paragraph 66, but that's when they want to kill you in a postgrad paper. But so paragraph 66. So let's have a look at this one. Movable asset replaced with a computer, it's also a movable asset.
Yeah.
It's okay in this question. Is that all right?
Yeah.
So we can defer. And I'm going to discuss how we defer just now. I want to do an example with you. So here we've got this. Okay. And I'm going to just change a couple of things. So what you do as part of this question is like this. Okay. You might sit there and say, listen, cost is 1,150,000.
Yeah.
You might go less that minus 150,000 worth an adjusted cost of $1 million. And that's how you might want to set it out as part of this question.
Okay.
So if they give you something including that, there's normally a mark for doing the VAT like that.
Okay.
That makes sense.
Yeah.
12C 2021, 400. 12C 2022, 200, no difference. Look where the year end is now. 28 Feb. So the first year, even though it's only 3 days, we get the full 400,000 Rand taken off.
Okay.
Then we've got the whole of 2022 year, which ends on 28 Feb, that's 200.
Yeah.
And this one we've got 12C 2023. And this now is going to be slightly different. This one's going to have a final total of 200,000 Rand.
Is the section 11E capital allowance the only one that's apportioned?
Yes, and I put in a portion one in here for this example. So we've got a computer, which I'm going to show you.
Yeah.
All with 11E is that they have to tell you how many years computers get written off over.
Okay.
So how many years, you know how many years computers are written off over? 3 years.
No. Okay.
Okay. But what I'm just trying to show you here is that it's exactly the same steps to adjustments. So there's still the 200,000 Rand capital allowance there. You
Okay.
that?
Yeah.
Okay. Now, what basically ends up happening is this. Okay. I suggest that people do is I suggest that they, when they're busy doing a question like this, you do the replacement asset first. And I'll just show you one now.
Okay.
So we've got a computer. How much did it cost?
2 million.
2 million. 1/3 for number of years.
Yeah.
You comfortable with that? Okay.
If they tell us in the additional information though that all qualifying assets are written off over 4 years or something, then would you use the 4 years instead
You use
of
the 4 years, yeah. But what happens is in practice, there's a thing called Binding General Rule 7.
Yeah.
And you're not required to know for, see, I don't know what UCT rules are, but for board exam, you're not required to know what those tables say. They normally tell you in an exam.
Yeah.
So they normally will tell you how many years the asset gets written off over. Okay, and now if it's bought on 1 May and the year end is 28 Feb, how many months is it going to be written off over?
10 months.
So times 10 divided by 12. I really like people to write it out in an exam because this is normally 2 marks.
Okay.
At undergrad. So there's 1 mark for 1/3. There's another mark for 10/12.
Okay.
And if someone makes a mistake on their calculator or doesn't count months properly, it's best to get 1 out of 2.
Yeah.
Is that all right? So how much is that? It's 2 million bucks divided by 3 years times by 10 divided by 12. There's your calculation.
Yeah.
Are you comfortable with that?
Yeah, got that.
Now, let me just explain what's going to happen now as far as this question is concerned if you've got a replacement asset.
Okay.
Okay. So in this question, we sold it for 1,450,000 Rand. Okay.
Yeah.
1,425. Let me make it more difficult for you. Okay. Change it. Let's make it sold for 1,710,000, including VAT.
Okay.
So tell me, what would happen if you sold it for 1,710,000, including VAT? What would you do in your solution? You'd say sold for 1,710
Yeah.
times by
15 over 100 over 115.
Is that all right?
Yeah.
Plus 1,710 times by 100 divided by 115, 148,65957. Okay. How much is your recoupment limited to?
Is it limited to the tax value of 200,000?
No. Remember what a recoupment is. I've sold it. They are now going to take their allowances back. So how much are they going to take back?
800,000.
Perfect. Is that all right?
Yeah.
Happy? Now, let me just explain. If you're going to incentivize somebody to replace the asset, what you need to do is you need to give them a benefit.
Okay.
Now, in the previous example, what did we do with the recoupment? We said the recoupment's 800 this year. What happens is if paragraph 66 applies, exam, you're going to say defer paragraph 66. And by replacing the asset, you don't have to pay all the tax right now.
Okay.
But what do you recognize? Okay. They say that you're going to recognize the 800,000 profit as you write off the replacement machine. And that's why I've asked you to do the computer before you do the machine.
Okay.
Does that make sense?
Yeah.
So how much of the recoupments are we going to recognize? We're going to recognize 800,000 times by 10 divided by 12 divided by 3. We're only going to recognize 222.2 now.
Okay.
Is that all right? And next year, we're going to recognize the whole 800,000 times 1/3. And then you recognize all of 800,000 times 1/3. And in the final year, we'll recognize 800,000 times 1/3 times 2/12.
Okay.
So what you'll do is you'll recognize the recoupment over the life of the computer. Is that all right?
Yeah.
That makes sense. Okay. So let's carry on with this now. So set price, how much did we sell the asset for? 148,6957. Up here. The amount. How much was the recoupment? Tell me.
800,000.
Okay, so the recruitment's 800,000. Okay, you comfortable?
Yeah.
Okay, and I'm going to do something different here. I'm going to just do that for the time being. So there's your proceeds. Is that okay? Your base cost now, cost was $1 million. How much allowances are higher up?
The capital allowances were, is it all the capital allowances? Right?
Has to be, yes.
Yeah, so it's 800,000.
And how much is we're going to get? 200,000.
Yeah.
You happy?
Yep.
So now my capital gain for this asset is actually equal to
686,957
minus 200,000.
Yeah.
My capital gain is actually 486,957. Is that all right?
Yeah.
And look what I'm going to do. I'm going to do exactly the same thing for the capital gain that I did for the recoupment.
Okay.
And how much am I going to recognize? 486,957. It's 1/3.
10/12.
It's 10/12.
Okay. So you defer the recoupment and the capital gain.
Yes. So my answer would be plus 486,957 divided by 3 times by 10 divided by 12. There we go. And that's your capital gain that you show. So that's when you replace an asset.
Yeah.
But remember, you need to replace it and it needs to cost more than the original asset.
Okay.
So did you see an example with this in it?
Yeah, I had an example like this.
Okay. So that's the way that it works.
Okay, that makes sense.
So effectively, step 1, tax value.
Yeah.
Step 2, calculate your recoupment or your scrapping allowance. Step 3, your proceeds. Step 4, your base cost. And step 5, when I say exclusions, it's defer.
It's what? Sorry, it just cut out.
When I say defer or exclusions, you're not recognizing it all now.
Yeah.
We're only going to recognize a little bit. That's the first step. but I like to build step 5 up into each of the deductions as you go.
Yeah.
Your solutions that you look at, it depends on how your lecturers have set them out. Often do the computer after the machine, and then after they do the computer, then they do this line item.
Yeah.
But I just think people forget to do that. That's why I prefer them to do the computer first, and then as you're doing the question.
Yeah, that makes sense.
But if you set it up like this, it works perfectly. Is that all right?
Yeah,
that's basically a quick crash course in how to do capital gains.
Yeah.
And I got to believe that in your SAP they're going to make it harder.
Yeah.
Now, I do not believe you can get through a SAP without finding one of these inside your SAP. Yeah.
Yeah.
They normally SAP exams just by their nature. I don't want to discourage you. Into paper is the most important thing that you can do. But essentially, you're only writing one SAP, so they do make the SAP just a little bit harder than your earned exam.
Okay.
So just bear that in mind. Okay.
Yeah.
But harder could mean many different things, though. Huh?
Yeah.
I mean, they could actually just do the example that I've just done with you, and they'll think that it's incredibly hard. And I mean, this is 10 or 11 or 12 marks, this example.
Yeah.
So, yeah. Okay.
And then I just wanted to check, what are the implications of being a personal service provider?
Okay. So let me just explain. Do you get to take your cycle legislation handbook into your exam with you or not?
Yeah, I do.
Okay. So do you know where to find personal service provider?
In the 4th schedule.
Okay. So let me just explain the whole concept of a personal service provider. I can send you 1 or 2 examples on typical questions of personal service providers after the Zoom session, by the way.
Okay, thanks so much.
That I've written, by the way. So let me explain the whole concept. So I earn a salary, okay?
Yeah.
I'd like to claim my maid as a deduction. I'd like to claim my rent as a deduction. I'd like to claim my electricity and water as a deduction. There's all sorts of things I'd like to claim.
Yeah.
I work after hours. I'd like to claim the food that I use after hours, that type of scenario. But you come with that concept.
Yeah.
So what they did was they created this concept called personal service provider because they thought people were abusing this principle.
Okay.
So their basic principle with this was, so I'm going to bring something across onto the page. Okay. The reason that they got upset is that people were claiming too many deductions.
Okay.
Why did they bring in the concept of a personal service provider? Okay, they brought it in because they wanted to limit the deductions that people could claim.
Okay.
Is that all right? So I'm going to
do
the Act, and I'm going to show you a couple of things inside the Act itself. Okay, so in the 4th schedule, we've got a definition.
Yeah.
And I just want to go through the definition with you. Is that okay?
Yep.
Just so that you can see it. Okay. So normally with personal service providers, it's a discussion included.
Yeah.
To go into here. So personal service provider means any company or trust where service rendered on behalf of such company or trust to a client is rendered personally by any person. So if you've got your circulation handbook there, that's the first requirement.
Okay.
Okay. So what I'd like to do is I'd like to tell you what happened with me and one of the consulting things that I did with drivers from Coca-Cola.
Okay.
Okay. So do you know what the implications are if you're a personal service provider, Section 23K and all of that stuff?
So I think it's that you wouldn't be allowed deductions if you are a personal service provider, and you get taxed at 28%, I think.
If you're a company, yeah. But so let me just explain what actually ends up happening as far as this is concerned. Okay, so with all of the truck drivers they've got Coke trucks. You've seen them deliver a cold drink, huh?
Yeah.
They only work for Coca-Cola.
Okay.
So what a whole lot of those guys had done was that they had basically created a company and they were running the company. And I'm going to show you why I had to make all of these Coke drivers unincorporated.
Okay.
So personal service provider means what? Any company or trust. So if you're a human being, you're not a personal service provider.
Yeah.
You comfortable with that?
Yep, got that.
You need to render the service personally.
Mm-hmm.
Both drivers are rendering the service personally.
Yeah.
Their own trucks, etc.
Mm-hmm.
It says such person would be regarded as an employee of the client. The Coke were not employees. It says where those duties must be performed mainly at the premises of the client.
Mm-hmm.
The Coke drivers don't do that.
Yeah.
It says when more than 80% of the income of such company or trust during the year assessment is likely to be received from any one client. You see one client over there.
Yeah.
So they were getting 100% of their income from Coke.
Okay.
And it says, except at the bottom here,
Yeah.
where you employ 3 or more full-time employees.
So if you do employ 3 or more full-time employees, then you're not a personal service provider.
Correct, but they cannot be connected persons. So you'll see it says not a connected person to you.
Yeah.
Can't be your family.
Okay.
So bear this in mind and think about what's going to happen now if all of a sudden you're treated as a personal service provider. Because in section 23, there's a specific section for personal service providers, and that's K. So it's, if you're a personal service provider, what can you get? You are not allowed to claim any other expense other than legal costs, see?
Okay.
Bad debts.
Yep.
Pension.
Mm-hmm.
Those are for share incentive scheme. Oh, sorry, no, those are for refunding of salary, refunding of restraints of trade.
Okay.
Okay. And you can claim finance charges, insurance, repairs, and fuel and maintenance. But look at the wording. It says wholly and exclusively for the purposes of trade. Okay. Now, truck drivers, I looked at them and I said, do you drive your truck home at night? And they said, yes. I said, then you cannot get any deductions, not for petrol, not for repairs, not for anything, because there's use on the truck.
Okay.
So do you understand? I got them all to stop being companies and become natural persons again. Because what happens is if I look at my boss and I say, listen, don't pay me, pay my company. What have they stopped me from claiming? I can't claim the maid. I can't claim the telephone. I can't claim the food because there's the sections I can claim.
Okay, that makes sense.
So they're trying to stop people from like juking the system.
Yeah.
Is that all right?
That
so
makes sense.
I'm going to send you an example. Let me just go into it. It's there. No, it's, there we go. Okay. I don't have it here, but oh yeah, question on personal service providers. Yeah. So I'm going to send this to you.
Okay, thank you.
And what it'll do is it will show you how personal service providers work, and it'll through a whole lot of expenses and show you which ones you can claim and which ones you can't claim.
Okay, that's great. Thank you so much.
Okay, so after doing this, you should be fine for like a service provider. So this question is good because what it does is it says, is it a personal service provider or not? So show you how to answer a discussion and then it'll show you how the number crunch works.
Okay, that's perfect. Thank you so much.
So that'll help you with that one. Do you think the personal service provider might come up?
Possibly. I've seen one or two discussion questions in the TATs that I've been doing, asking, like saying that this person wants to incorporate a company in order to minimize their tax and stuff. And then we have to discuss whether or not it would. And then like one of the key things is that they may be considered to be a personal service provider, and then giving all the reasons under that.
Now, if you want to, here's another one I'll send for you. I'll send that. This one I set for one of the varsities 2 years ago. I have a fantastic PSP integrated with small business corp question that I set for like one of the year tests for one of the varsities for CTA this year.
Okay.
I think maybe, I don't know if are you worried you might get something on small business corporations as well?
I think we might, because we haven't been tested on that this year yet. Last year, I mean.
Okay, so I've got one that I set. I'll find it and I'll send it to you as well.
Okay.
That one's got, is it a personal service provider? Yes or no. It's also got, is it a small business corp? Yes or no. And
okay.
It's also got a discussion question on how to actually just tax plan in and around the personal service provider and a small business corp, where you split companies into component parts.
Okay.
That is as hard as you could possibly ever see it in an exam.
Okay.
So please don't think that that's at an appropriate level for you. But if you do something similar to it, you'll know how to approach it.
Yeah. Yeah.
From a discussion perspective, because people really, it's a very common exam question and people really do struggle with it. So just have a look at only at the public, the personal service provider portion of what I'm sending you. And the other thing that they really like to do a lot in postgrad is to actually ask you whether something's a small business corp or not. Have you got questions where you need to work out whether it's a small business corp or not?
I haven't seen one in the past papers. I do have notes on it, but I haven't seen an actual example.
Again, all of that stuff is in section 12E in your act, subsection 4. So you know where to open up and just find all the stuff, but it'll be in there as well.
Yeah, I do have.
So I'll send you these 2 questions and then I'll find the exam question that I set this year. Because it's really, it's quite topical at this point in time.
Yeah.
I would imagine that they would have done something in the postgrad space one at this year. And sometimes graduate lecturers are a little bit lazy and they go find questions from postgrad and they modify them for you. So suck.
And then can I just ask 2 more quick questions?
Sure.
So for travel allowances, I know for the deemed method, when you for the reduction, in order to claim the fuel and the maintenance one, the employee has to incur the full cost of fuel and maintenance. But when using the actual cost method, does it also have to be the full amount, or can you?
No, so actual is on actual.
Okay.
So and it's not, they don't need to incur the full cost, they need to incur the full private cost.
Okay, is this for both or just for actual?
No, for both.
Okay.
No. So actual is whatever you spend.
Yeah.
For deemed, you need to pay for all of the private expenses.
Oh, okay. So it's not business as well. It's just for private.
But questions very rarely do that thing. So what often happens is that they'll say that all maintenance is paid for by the company. So when you're doing a car allowance, you won't put any maintenance into the actual calc, and you won't put any any maintenance into the deemed calc.
Okay.
Is that all right?
Yeah, that makes sense.
Yeah, so you can do that. Do you want some extra examples just on car allowances and stuff like that?
If possible. I seem to struggle with that a bit.
Yeah, maybe in my videos. Let me just see. I need to. I'll try to give you a couple of links and I'll change the settings on them so you can access them if you want to just look at some of the stuff.
Okay, thank you.
I'll send you 1 or 2 just extra questions. You know what happens when the cost goes above 665,000 and stuff like that? where you're not allowed to claim finance charges and you're not allowed to claim depreciation on more than the amount on your table.
Okay.
Have you seen questions like that or not?
No. I've seen in the notes that they said it's limited to the 665, but we haven't gotten an example that actually exceeds that.
So I'll send you my notes, and you can have examples in my notes.
Thank you so much.
Okay, so I'll send you some notes with car allowances. You'll see my example at the back end of the notes has got calculations like that, and they put deep interest into from your interest fringe benefit.
Yeah.
They can also put that into car allowance questions as well.
Okay.
So maybe have a look at my notes and just have a look at the final examples in my notes and stuff like that. Okay. Those are set to be very, very hard. I'll send you a set on answers. Okay.
Okay, thank you. And then just one more thing, sorry.
Sure.
If the right of use of residential accommodation is provided, and it says that the employer has incurred all incidental costs, then does that include fuel and power? Or do they have to explicitly mention the fuel and power?
Look, it depends on who the examiner is. If they've included all of the incidental costs, normally that would mean fuel and power.
Okay, because I was doing an example again, and then for the value of C, so it said that the employee incurred all incidental costs like water and electricity, but they didn't explicitly mention fuel and power. So I used 18 for the value of C, but then in the memo it was actually 19. So
yeah, I would imagine that it would be included. Yeah.
Okay. Okay.
Yeah. Just be careful in exams. Sometimes I see them put stuff like hotel rooms in. So
yeah.
Fuel, power, and meals. But because it's not 4 rooms, you can only still put 17 in, huh?
Okay.
That makes sense.
Yeah. So
if I want to be nasty to an undergrad, I'll put a hotel and the people will see that meals are provided. They'll see that electricity and water is provided. They'll see everything is provided there.
Yeah.
But because the thing is only 2 rooms, you only put a 17 in.
Okay, that makes sense.
I promise you, it's like I can sit there and know what's going to happen. I start multiple exam and 90% of the people get it wrong. So so just watch out for a hotel room. I don't know. Depends on how nasty people want to be when they set exams.
Yeah.
But I mean, if you've got any questions each day, you can actually just ask me for a little session and I'll help you with all of the little mini questions that you've got. But I'll have a look at my notes that I give you for travel allowances. If you like that, and there's other notes that you'd like for other sections, I can send them through to you as well. Okay.
Okay, thank you. And then, sorry, can I just ask one more question? Just one more.
You can ask as many as you like.
It's just for the low interest loans and the subsidies. So if we get an example where it is a low interest loan, but the employer also subsidizes it, would you I would assume you can't get a double fringe benefit, right?
No, but what happens is you've got a situation where sometimes it's a subsidy and sometimes it's a loan. Do you know the distinction between the two?
I think if the interest paid by the employer and the employee is less than what's charged at the official rate, then it's a low interest loan. But if the sum of that exceeds the official rate, then it's a subsidy.
Yeah. So the subsidy, basically whatever the employer pays. If it's the subsidy side of things.
Okay.
And then it's the opposite way around for a low interest loan. And they normally do the rates for the low interest loan because they're not book, because the book gets printed before the year happens.
Yeah.
They've got to tell you what the interest rates are for a low interest loan there.
Okay.
Can I ask you to do one thing? I sent you a question called Lenny Molefe.
Yeah.
If you are worried about low interest loans and how they might get asked in the exam, Molefe, that I'll show you the most common way that they ask low interest loans without you knowing about it.
Okay.
So even if you can't do the question, just have a look at how they deal with the low interest loan in that question.
Yeah. Okay.
And what they do is they say that people are off due to COVID, etc. So just think of that from a COVID perspective.
Okay.
Because like in years where there's been COVID or reason for, or people go on strike, just have a look at that solution and structure, because I've seen lots and lots of different varsities structure things like that for low interest loans. So I'm very nervous. The reason I gave you that Lenny Molefe question is because there's been interference in the day-to-day workings of people. And that's sometimes I ask those questions. So just have a look at how it's structured.
Yeah.
So, yeah, and you'll look at it and you'll see, normally when you set it like that, people don't even realize there's a low interest loan.
Yeah.
So just have a look at it. It's just, do you know what the thing is, whatever you see, as long as you, I'm like of the belief that if you've seen it before, even if it's hard, at least you know how to approach it. That's why I said with the car allowance, just have a look at my chapter on car allowances and look at the example close to the back, with over 665,000 and got stuff like that.
Okay.
I've got a video on that set of notes as well. I'll see whether I can send it to you as well.
Okay, thank you so much.
At the moment it's locked, but I'll see whether I can unlock it for a couple of days for you to just look at it. Okay.
Okay, thank you so much.
Different system where it's been locked in that other system, but I'll try to see whether I can just open it up and I'll send it to you. But any questions you have, just ask me for like a quick Zoom session and I can go, even if it's 5 or 10 minutes, anything that you've got.
Okay, perfect. Thank you. So tomorrow is like basically the last day of studying because I write at 8 a.m. on Thursday morning. So you're
welcome to send stuff through, and I'm like I don't work. I work till late at night, so even if it's like 6 or 7 o'clock, you have my cell phone number. You can just give me a phone call and I'll help you out for a couple. Not a problem.
Thank you so much. Thank you very much. Okay, and also, will you send your bill to us also, please? For
I'll send you a bill.
And this,
I will send you a bill. Yeah, it's cool.
Okay, thank you so
much. Thanks, Samara.
Thank you. Okay, bye.
Good luck if I don't see you. Speech again.
Cheers. Thanks very much. Bye.
Bye. Cheers. Okay. Stop share. End it, and then meeting for all.